All right, everyone, good evening and welcome back to the channel. It's Friday night, and today we'll continue sharing our views on the major cryptocurrencies and some altcoins. For those who followed our trade yesterday, the return should have been quite solid. Right now, the position is showing around 314% profit, though that's with 50x leverage. If you entered around 2060, 2046, as we discussed, the gains so far have been quite decent. Now, the question is, what should we do at this level? And as we wrap up the week, how should we evaluate the broader market structure? Let's start with Bitcoin. As we've said before, the market is still in a weak consolidation phase and it likely hasn't fully bottomed yet. From a fundamental perspective, the market remains in a zero-sum environment, existing capital is rotating, but significant new inflows have not yet entered. Overall confidence hasn't fully recovered either. In addition, the crypto market, especially Bitcoin, has shown a high correlation with US tech software ETFs, and software stocks have been under heavy pressure recently. However, I believe this impact will eventually be repaired by the market. Why? Because in my view, Bitcoin is being wrongly sold off. Software companies are centralized institutions. Their business models are subscription-based, they provide services, and users pay recurring fees. But AI can easily replace many of these subscription-based services. Whether it's coding or strategic consulting, AI agents can increasingly handle these tasks locally and autonomously. Bitcoin, however, is not a software company. It's not a subscription service. It is a fully decentralized ledger, something unprecedented in human history. Looking ahead, if the total economic output of the AI economy eventually surpasses that of the human economy, we must ask, will AI trust centralized institutions? Will it trust human-controlled financial intermediaries? Probably not. Even if AI temporarily uses US dollar stablecoins as a bridge, those stablecoins are ultimately backed by the US dollar. And behind the dollar stands the Federal Reserve and the US government. These are still centralized systems. If AI were to choose a transaction medium it truly trusts, it would likely favor blockchain-based crypto assets, systems governed purely by code and decentralized networks, not by any single individual or institution. That's why I believe Bitcoin's long-term potential is virtually unlimited. I remain highly confident in it. Recently, many people in the industry and many analysts have been saying crypto will die, but we hear this narrative in every bear market. Especially at this turning point in the AI-driven economic era, I believe the value of crypto should actually become more prominent, not less. That's why I believe Bitcoin is currently being mispriced and significantly undervalued. Now let's go back to the chart. As we mentioned before, price has already returned to this range. Yes, it has come back into this range. This range is a core discussion zone between 24 and 2025. Price consolidated here for more than a year. That's why we say this type of price discussion area is extremely meaningful. Why is it meaningful? Because at this level, whether it's core buyers, major market makers, or retail investors, a large portion of their positions and their cost basis were built here. Their holdings and prior selling activity are concentrated around this zone. So this area is very important. I've said before that entering this zone multiple times does not automatically mean price will stabilize and bounce. It doesn't guarantee that. Why? Because this is fundamentally a price negotiation zone. What does that mean? It means that within this range, we may no longer see large-scale leverage liquidations like we saw in the previous sharp drop. That previous wave was what we call a leverage liquidation cascade, accelerated selling, panic-driven declines, forced liquidations, options, expirations, triggering settlement pressure, all combining to create rapid downside movement. Right now, that type of forced liquidation dynamic may be gone. What we are left with is price negotiation, pure supply and demand discussion. But in order to form a real bottom during this discussion process, we need two conditions. First, new incremental capital must enter the market. Second, market supply must undergo sufficient rotation, meaning thorough position exchange and turnover. Has that happened yet? Clearly not. At the moment, this is still just a weak consolidation. Could there be a rebound? Yes, it's possible, but what kind of rebound would it likely be? Most likely, it would be an emotional rebound driven by seller exhaustion. When selling pressure temporarily dries up, price can bounce, but what happens with a seller exhaustion rally? It inevitably runs into overhead supply trapped positions sitting above, and that overhead supply is heavy. Whether it's institutional positions, retail holders, or concentrated futures contract entry prices in this region, there is significant trapped inventory waiting there. And that makes any rebound into that zone potentially very dangerous. So if a rebound happens, we should approach it with a short selling mindset. When can we start going long? As I've said before, we need to see a sharp, accelerated drop first. We need to see a clear expansion in spot trading volume. And most importantly, we need a prolonged period of price discussion, a prolonged period of discussion. That discussion can be sideways, it can be volatile, but there must be a real process of price negotiation. After that discussion phase, we need to see a strong surge in volume, a clear expansion. Even if price continues to consolidate afterward, that's fine. At that point, we can begin building positions. That level might be around 50,000. It could be near the lower boundary around 50,000. Or it could even go lower. It could go lower and form discussion down there. Should we panic at those levels? I don't think so. I think you should be preparing your capital. It's entirely possible that price could test extreme levels like 35,000, really extreme levels. It could even test 32,000 or 33,000. These are deep downside scenarios from a medium to long-term perspective. But if price reaches those areas, should you panic? No, those are the areas where you should be thinking about actively building long-term positions. Right now, Bitcoin has only fallen about 50%. There is no need to panic. In past cycles, Bitcoin has fallen 70% to 80% or more and still went on to make new all-time highs. So there is absolutely no reason to panic. And let me emphasize again, at this turning point of the emerging AI-driven economy, the long-term value of crypto assets could be significantly amplified. That's our view on Bitcoin. Yesterday's trade, everyone made money, right? We repeatedly told you to open short positions around 2046. That was a very clean and beautiful short setup. Now the question is, should you close the position here? Pay attention, as I said yesterday, this is not the place to close the position. This is the place to trail your stop loss lower. Where was our previous stop loss? It was up here, right? And we said that once price breaks below the midpoint of this range, the center line of this box, you should move your stop loss down to this level. Why? Because this area was the support level from the previous round of price discussion. That becomes your new stop loss level. If price continues to test the lower boundary of the channel or even breaks below it, then you can move your stop loss further down to this next level. So right now, set your stop properly and let your profits run. Don't stare at the chart all day, overanalyzing every move. A lot of money is lost exactly that way by overanalyzing instead of executing. Trust your strategy, execute your strategy, that's it. If you follow our channel, you'll consistently capture these opportunities, right? So make sure you subscribe if you haven't already. And if you're already following, leave us a comment, tell us what you'd like us to cover next, and we'll break it down for you. As you know, we usually focus on major tokens like Bitcoin, Ethereum, and BNB. But the crypto market has hundreds, even thousands of tokens, excluding meme coins. Among them, there are many with real potential. I've been in this industry for nearly 10 years, so there's a lot more experience and insight I can continue to share with you. That's it for today's analysis. We'll continue tomorrow or next week with updates on how the market structure evolves. Thank you for watching and see you next time.